This is the Be Your Own Bank Catching Pips Power Pack Thursday. I'm so excited because tonight is all about making some money, catching some pips. Let's get in the market together. I want to thank you so very much, Miss Edgecombe, for what you do. She is definitely a phenomenal woman in the Orlando market. So, yeah, she is definitely someone that if you have the opportunity to be in her space in Orlando, you definitely want to take advantage of that. But this is the Be Your Own Bank. You have the opportunity to learn. You enroll, you learn, and you put yourself in a position of profit. And tonight is designed to show you exactly how you can do that. That's what this is all about. So I'm excited because what we're doing is tonight is all about taking trades. Tonight is all about making sure we put ourselves in that position of profit. And that's what we are going to do. And that's what we're here to do this evening. So let's see. Ladies and gentlemen, let's see what is in the market. We are here. Now, what we're looking for, this is what we call the BYOB cash out. So I want everybody on the call to understand what it is that we're looking for. So everybody's on the same sheet of music. So you understand how we're taking trades, what we're looking for when we take a trade, because what the BYOB cash out does is it's three simple rules. Three simple rules that we're looking for in order to take a trade. So this is the foreign exchange market. The foreign exchange market is definitely the largest financial market in the world. The foreign exchange market it trades at over $5.3 trillion a day. Okay. Now with the cryptocurrency, it's over 11 trillion. Now let me put that into perspective for you. We all know about the credit market. Everybody knows about that market because you got a house, you got a car, you have anything, you got some clothes, you purchase that on credit. It's larger than that market, okay? So let's put that in perspective. This is larger than that. So we've made those purchases, but yet you now can control the infrastructure. So you now can think like a bank, act like a bank, and become your own bank. And that's what this is designed to do. So what we do is you enroll, you learn, and you put yourself in profit. So you control. So this is about educating you financially. This is about, because what Be Your Own Bank is all about, it's about financially educating and financially impacting 1 million families by the 28th of March, 2021. So I'm not giving you the trades. I'm not doing it for you. You are going to be financially educated. And that's powerful. That's impactful. And that is what we're doing. And that is what you're here to learn how to do. So what the web analyzer is. Now, when you go through the academy, when you actually go through the IML Academy, what you are actually going to do is you're going to learn how to, they're going to tell you pick a currency pair. They're going to tell you pick a currency pair because you're going to learn market structure. You're going to learn how the currency moves. You're going to begin to understand how the currency flows. You're going to begin to understand, watching that currency pair, what those currencies actually do. And you're going to begin to learn support and resistance lines. You're going to learn all of that with those currencies. So yes, that's very, very important. But what's also important is that when you're doing that and you're learning that information, you're going to learn about trigger points, entry points. And if you subscribe to the YouTube channel, BYOB Challenge, subscribe to the YouTube channel, there's a phenomenal training about the Japanese candles, and you will actually learn about those entry triggers and those entry points. Why do I mention that right now? Because what the web analyzer does is it's broken down into tiers. It's broken down into 3 different tiers. You have your tier 1, where there's no analysis needed, right? No analysis needed at all. So someone like myself is sitting back and they're calling out trade ideas, and you can just trust their analysis and take those trades. Then you have tier 2, which is little to no analysis needed, which are what we call power trades. And then you have tier 3, which are minimal bursts. Those are volume bursts. Now, what I just said about the entry triggers are significant, because when you study, when you're actually learning the market, you're learning how to trade, you're learning those currency pairs that the university teaches you. What this tier 3 is it scans the market. So instead of you only being focused on 1 or 2 currency pairs that you have to consistently monitor, this is going to scan the market for you, and it's going to give you alerts. And it gives you those alerts based on those entry triggers. And so now you actually get alerts, and you can take your human analysis back based on a strategy that you select, which in this case, what we're studying and what we're doing is the BYOB cash out strategy. Be your own bank, we cash out with 3 simple rules, and you get to cash out. So you take that, apply it to those entry triggers, that entry trigger that the web analyzer went through and gave you, and now based on that, you make a decision if you want to take a trade or not. So that is so very important, because now it gives you a higher probability of winning a trade. So what we have selected is the BYOB cash out, and you actually get to trade the foreign exchange market, cryptocurrency, you get to trade indices and metals. So what I'm going to do is I'm going to go back to the app. You hear that? That's when you hear that, that's actually them scanning the market and notifying you of a possible trade that you can actually take. So along the left side, it's going to tell you, I got a potential sale. It's going to give you, let me make sure I only got the 15-minute chart checked on here. Yep, that's all I got. So along the side, it's going to tell you that I have a potential sale or a potential buy. It's going to give me the currency pair that trigger is coming from. And then it's going to give me the call price, right? That's what it's giving me. So I have the UTC time, I got the call price, and the UTC time where that trigger came from. Now, the cash out, BYOB cash out. Things I want to make sure of, very important. And I'm gonna highlight these things. When I look at my currency pair, right? This is my currency pair. I want to be on a 15-minute chart. This is my currency pair. I want to make sure I'm on my currency pair. I want to make sure that 15-minute chart is highlighted. I also want to make sure I refresh my page. Now, I just refreshed mine, but I'm going to do it anyway. I want to refresh this page. And I say that because I've heard it before. You know, it could be your internet, it could be anything, but you want to make sure that your page is actually refreshed. And I mean, I was sitting here the other night with my son, and we literally had 2 different times. Like, this is the countdown to the next candle that's right here, and we literally had 2 different times on ours. So you want to make sure, because that's critical to your entry point. Success in the foreign exchange market, the foreign exchange market is literally, you can make money with it going up, with it going down, with it going sideways. I mean, it's anyway. The stock market is buy something, hold it, and pray that it goes up. Foreign exchange market is buy, sell, sideways, whatever it's doing, I'm gonna make money. The key to success in the foreign exchange market is the proper entry point and the proper exit point. You get that down, you are successful. That's it. Proper entry, proper exit. and you are going to have success. So that is what you're looking for. So as long as I have that, I'm going to have success. So we want to make sure those things are in place, because me having a wrong time, me having a different time than my son, that was significant when it came down to, you know, us. So I want to make sure, I want to validate my currency pair. I want to validate my time frame. I want to make sure my page is refreshed. So I'm going to have, you know, that makes a difference. 30 seconds, 2 minutes, it makes a difference. When I refreshed my page, it made a difference of my PSR being flipped or not. So I'm going to get to that as well. So, but that definitely made a difference. So you want to make sure that's done. And then your strategy selection, right across the bottom, BYOB cash out. I want to make sure my strategy is selected. So now we have those parameters in place. My 3 rules, my 3 indicators. The first thing that I'm looking for, the first thing that determines if I go any further into taking a trade is my stochastic. My stochastic. The stochastic needs to be around the 80 for a sell, and it needs to be around the 20 for a buy. Okay? It needs to be around the 80 for a sell, because this is the momentum. The stochastic measures the momentum. Very, very important. So when it's around the 80, that means the market is oversold. So I'm looking for it to begin to sell. I mean, it's overbought. That means I'm looking for it now to sell. If it's around the 20, it's oversold. That means it's too much selling going on, and it needs to buy now. So that's what I'm looking for. So, for example, this isn't lining up right here, but right here, I see my stochastic is around the 20. So this means I'm looking for a buy. So I'm looking for the blue line to cross over the red. Now everything I'm looking for from here will be a buy. So that means when I come to my chart, I'm looking for green candles and my PSR to be at the bottom. That's not lining up. So what we're going to do is move on from this trade. This is too far off, because when I'm looking for a buy, my blue line crossed over the red for an upward trend. And I'm going to show you just how important this is. The stochastic is so important to successful trades. And you also want blue candles with the blue candles, the Hikinashi candles. Now remember, the Hikinashi candle is an indicator as well. You want to analyze your trades on the web analyzer. That's important. You're analyzing on the web analyzer. You're not analyzing on MetaTrader 4. You're analyzing on the web analyzer, because this is an indicator. Japanese candles are what's on your MetaTrader 4. So that's important to remember. So now you want the Hikinashi candles, because Hikinashi candles measure trend. So my Hikinashi candles move in an upward trend, and then upward Hikinashi candles with a flat bottom, green candles with a flat bottom. And we're going to have, for me to show you this, we're going to have to change. But here's some Hikinashi candles with a flat bottom and an upward trend. That shows the trend. And then I have my PSR, which is a parabolic stop and reverse. They show the trend changing. So that in itself, that is what we're looking for. Those 3 that are with them on the bottom, I'm looking for a buy. With them on the top, I'm looking for a sell. That are the 3 simple rules that I am looking for. So let's start identifying some trades. Let's start identifying some trades and actually looking for some trades so we can get in the market and make some money together. While we're pulling anything up, does anybody have any questions, any comments, or any currency pairs?
Yes, Ms. Dyer, this is Sharon. Can you look at XAU USD?
You guys really say 24 hours without sleep. You really do. Okay, let's talk to Ashley.
Okay, so this will be a good one. So this is gold in the US dollar. Now, It's not ready yet, but it's coming up. So we'll put this on our watch list. And so let's analyze it. Let's put it on the watch list. So let's analyze it. So right now, this candle just formed, right? Because we are at 9:15. These are 15-minute candles. So we know every 15 minutes we get a candle because these are 15-minute candles. So first thing I want to look at is my stochastic. So what I'm looking for is the blue line across in a downward position. I need it to go in a downward trend. So right now it's still going sideways, right? It's still going sideways. So what I do know is that first thing first is not ready because my stochastic is still going in a sideward position. It's going to the right. So you never want to enter a trade with it going to the right. So this trade is probably going to be ready within the next 15 to 30 minutes. So because what I see is my PSAR is getting extremely close to my candles. So if you notice the PSAR was rather, it had a nice gap and it was in a nice uptrend, right? But now it's getting rather close to my candles and it's beginning to touch them. Like it's real, it's closing in and it's getting tight. So the PSAR gets real close and it gets real tight to my candles. And then once it touches, it flips. So once it flips to the top, now my PSAR is at the top, and then but I need that red candle too. But I do not have a wick on the bottom of it, but I got indicators telling me that it's coming up close to a flip to go into a sell. So we're not ready to enter a sell yet, but it's coming soon. So put that on your watch list. So everybody, we got one for the watch list. Now see, Tuesday, we weren't even looking for a trade. And what happened? Soon as we got in the market. Now, one thing to remember too is we had a summit coming up. So the market is going to be a little bit slow. I hear someone.
Yeah, this is Mr. Rogers. Just to add to that, just be mindful, even as we're doing this training right now, we are in the Asian session right now, and the G20 summit happens to be right now, probably getting ready to kick off in the next hour and a half to 2 hours, which is being held in Japan. So the market may not be as responsive as it normally is with that summit beginning to take place. So I just wanted everyone to be mindful of that. And those are some of the things that will contribute to the stagnation in the market, or what we're looking at right now is consolidation, as that stochastic it's not really turning. So that could be one contributing factor at this particular moment as we're looking at currency pairs in the market.
So that definitely explains this. I knew it was tomorrow, but not even thinking about the time difference when I was thinking about that explains this. So based on what Mr. Rogers just stated, that is when you start seeing things like this, that's the news. So the market is predictable. The market does repeat itself. And the market, when you look to the left, it does do what it's supposed to do. So we can look at, regardless if we have news or don't have news, when we look and we know exactly what's going on. So even with this, right, even looking at this, I still don't see an entry point. So you don't force a trade. But when you see this and you're like, okay, what's going on? That's when you say, okay, because does the market normally jump like this, do this? But I still know this is not a good entry point. This is not somewhere that I would want to enter the market. So because you know the 3 rules to this strategy, because you know to take a trade only when things line up properly, you know that, hey, guess what? This isn't a good entry point. But this, when I saw this, because I was actually going to go look, I was going to go say, okay, because I knew it. That's why I mentioned it. But so I'm glad Mr. Rogers just mentioned it right now, that about the time difference and it actually kicking off, because I can look at this and say, okay, it's something going on. But look, I mean, the market is telling you that it's a news, but my rules tell me I don't trade this, right? Because I know, even though this, look at the stochastic. I want my stochastic in a nice downtrend. My stochastic is in a curve. It's like sliding to the right? It's sliding to the right. And so this tells me that even if I would have got into the trade, so even if I would have done it, this would have been in a very slow, I would have been in this trade for a long time. I would have been in this trade for quite a while. This is not a trade that I would have got in and out of. So this in itself tells me that, okay, this was not going to be a trade to just get in. Because look at the stochastic. It tells you, when I tell you this is what you're looking for, that crossover where it's going up. This is going sideways. So this in itself is already telling you, I know for a fact, this is not a trade. This is a sideways trade or a long trade. The stochastic speaks to you. It tells you. So the market tells you what's going to happen. You just have to ask yourself, are you listening? And then when I go to enter, I'm looking for red candles with a flat top. So look at the wick on the top. This actually has a wick on the top. So that tells me right there that I don't have a strong trend. So this tells me the trend is not strong in a downward. This tells me the trend is not strong. Yes, I have a nice gap between, I do have a nice gap between the PSAR and the candle. So I get my 10 pips, but it's a possibility, see, we're working at 92% and above. So this case, you got it, because I can tell you got it. I can look at it and tell you got 10 pips, right? But barely. Look at that. So if your entry point was not dead on, if you hesitated in your market execution, if you weren't spot on, right? Guess what? You missed it. Because that was just 10 pips. So if you did any hesitation, like when we did the other night, where some people got in halfway through, you didn't get your 10 pips. You see? So some people got in late because you didn't, your trigger. You want to make sure that so that wasn't strong. So it got you 10 pips, but you want to, and that's a point while we're looking at this market and what it's doing. So even if you have to, if you don't do your 10 pips from your market execution, if you have to come back, and I'm going to show you a live trade from earlier. If you have to come back and do your 10 pips from where the candle starts, like if your market execution isn't a quick one, do your 10 pips from where the candle starts. But once again, I wouldn't have took this one, but I'm just using this as an example to tell you, do your 10 pips from there. Because does anybody have a currency pair that you got a call or you see one, or? Because I want to show you something while we're looking. Okay, so somebody that's been trading with me, would you take this trade? Unmuted Mike.
No,
Tell me why.
No.
because the stochastic, the
Stochastic.
stochastic rather is in the middle of the chart.
Correct.
Thank you. So, what are the rules? What are the rules? The rules are that the stochastic has to be for a buy. The stochastic is 3 rules. The stochastic needs to be around the 20, right? The Candle has to be green with a flat bottom, and I need the piece on the bottom. Now, 2 of the 3 rules look very, very good. They do. And so this is what we were talking about Tuesday, about your emotions, about being tempted. But it's not about, oh, well, it looks good, or, oh, well, this is a possibility. Because right now you had a 50-50 chance. We want to stay at that 92% and above. We want to trade smart. We want to trade by the rules. We want to trade with common sense. We want to trade what we know, We want, because we want what is done gets duplicated. We want to trade as an expert, because what I want you to affirm always is that I am a master trader. You want to always speak that. You want to know that. You want to say that, and if you're at the Pips and PJs, you know that every time you sit down, you say, I am a master trader. My trades end in profit all the time, always. That is what we say. That is what we do. So you follow the rules. We do not trade with emotion, because I might feel like this looks good, right? I know that this candle is strong. 2 of the 3 look wonderful. However, this third one does not, because remember, it scares the market for those entry triggers, but we don't know the market structure. You do not know where you are in the grand scheme of things. You do not know if if I'm on a trend. I do not know if I'm in a range. I do not know where I'm at. This eliminates you from having to go to the 30-minute, to the hour, to the 4-hour, to all of that. And yes, you can do advanced, and we'll get to where we're doing higher, because yes, you can do all of those things. But right now, you can get your 10 pips and cash out. That's what the 15-minute chart is for. Get your 10 pips and cash out. But so I don't need to know where I'm at in the market, because no matter what I'm at, if I'm on a pullback, if I'm on a trend, if I'm on a range, regardless of where I'm at, I can get my 10 pips, because that's what this is designed for. That's what this tool does. So I don't need to know where I'm at in the grand scheme of things, but what I do know is that my stochastic measures the momentum, and it needs to be at that 20 or that 80. And if it's in the middle, I'm missing the momentum. I'm missing the movement. The momentum is not at the top or the bottom of what I'm looking for. So that is very important. That is so critical. So all 3 of the rules are so critical to line up for you to have a successful trade. Any questions on that? Any questions? That's fine.
No, I've got it. Thank you.
Another currency. Matter of fact, let me pull up our watch list, because we got like 2 minutes.
I have a question.
Who is I? Who is I have a question? Who is I? Who's speaking?
Kelvin Pittman.
Okay, Kelvin, what's your question? What's your question? Go ahead.
On the chart, with the graph with the lines, are we looking at the red or the blue one to measure, like, when it should be at the 20 mark?
You talking about this right here, the chart that we're on right now?
The stochastic, you're looking at the blue line. That is the indicator that you're looking for.
So
to determine what the movement is, we're looking at the moving average on the blue line.
So this right here.
Yeah, thank you so much.
You see what I just drew a purple circle around? Is that what you're looking for, Kelvin?
Yes,
yes,
ma'am.
he's looking at the blue line.
Okay. Yeah, that right there, that's what we're looking for. And so on our watch list, the XAU USD, it was still, the stochastic is still going sideways, and we just got another green candle. So we're still on the watch list. Yeah, that summit is getting us. Supposed to be catching some pips right now. Oh, I just did that one. Huh?
As we're identifying some of those who've been traded and understand, we want to make sure that everyone is getting the optimum opportunity to extract pips out of the market. So what currency pairs should we be looking at to see if it's a viable option to take advantage of the BYOB cash out? Unmute your mic and this is study hall. This is us becoming profitable together. So we want to be able to, yes. And what currency pairs are normally called in the Asian market? So these are the currency pairs that we should be analyzing together. So, and this is class participation. So unmute your mic.
JPY.
Didn't hear you.
JPY.
And what else? JPY what? That's only one currency. So you got, when you're looking for currencies in the sessions, you want to say JPY, CAD, JPY, NZD. So this is how you pull all this stuff together.
Man.
This screen she has on now looks like a good market to enter in.
Would you who's speaking?
This is Kelvin Pittman. The graph that you have up now, it looks like a good market. I see that the stochastic, the blue, is like in between the 20 and 30 mark. Look like the candle and the pip is like you said, with the little, you can see a wick on it. Just from my understanding, I think it might be
The PSAR is missing.
Oh, okay.
Right. So we're almost there, but the PSAR is missing. So that's very important. And I'm glad you went with the unmuted mic, as Dr. Bythewood was saying, because this is how we learn together. This is how we get in the market together, because it's important. So yes, the stochastic is going in an uptrend. So we do see that. So that is good. And that candle is strong. So, and it's not the wick that we're looking for. What we're doing is, this is a strong green candle with a flat bottom. This is what we're looking for, the flat bottom on the Hikinashi candle for a buy. And like if I was going for a sell, you have a flat top for a sell and a flat bottom for a buy. So this meets the criteria for a buy candle. Now, if it would have had a wick down here, when you mention a wick at the bottom of a buy eliminates it. So what you're doing, this is a good candle for a buy. This is what you're looking for. But the PSAR needs to flip. And the PSAR can sometimes flip. It does. The PSAR doesn't wait for 15 minutes to flip. Just so everyone knows that. The PSAR can flip whenever it flips. So it can flip right now, because what you see is that the candle is touching that PSAR. It's touching it. So it's gonna flip soon. Because that's what's called a stop and reverse. So because it's called a stop and reverse, whenever it actually touches it, it's going to flip. So it's gonna happen soon. And when it happens and when it touches it and when it flips, that's a trade. You wanna get your 10 pips. So that's a good call, Kelvin.
Okay, so the PSAR is the dots basically.
Yes, the PSAR is the dots. That's the third rule. And in order to enter a trade, you want all three. And so you want the PSAR on the bottom. This kind of, imagine the dots pushing up the candle.
Okay.
And
So just to add to that, Mr. Pittman, so as you look and you want to actually learn how to use the tool, so we know that two of the criteria are met with the stochastic and the flat bottom for a buy. The next thing we're looking for would be a PSAR that supports this trend. And now you can put this on your watch list, and then you can look at your tool, the web analyzer, and you see right here, this the next candle is going to be forming in about 9 minutes. So this is an opportunity in the next couple of minutes. That PSAR, once that PSAR flips to the bottom, and you know that you are ready to market execution, and then you can enter into that trade. So this trade is going to happen. So folks, you should be preparing yourself in the next 15 to 20 minutes to take advantage of this currency pair, because this will be a trade and you will get your 10 pips and cash out.
Hello?
Okay. This is I just had an aha moment because I'm looking at the rules and then looking at this chart, and I'm just like, oh, okay, this is really easy. Like, this is very simple. And because I was looking at it like a couple days ago, and then going through the MetaTrader 4, and it looks different on there than it does using the web analyzer. So I was more confused using that MT4, but here it's like having that ding aha moment, like duh, like this is easy. Okay, so I feel good about that.
Right. So just to add to that, and this is for clarity for everyone, understand that your MetaTrader 4 does not allow you to have the Hikinashi candles. So remember, for those of you who are entering trades, your MetaTrader 4 is specifically for you to enter and exit trades. All your analysis should be done on your tools. And the reason why this strategy was put together and it's housed in the tool is the Hikinashi candle gives you the trend indicator. So you're not going to ever see this type of candle on your MetaTrader 4. So everyone needs to be completely clear and understand that. Utilize the tool web analyzer for your analysis, and you only are using your MetaTrader 4 to enter and exit your trades.
I get that now. Because I was having one of those moments where I was like, I don't understand what's happening, what's going on. But yeah, no, I get it now. Now that I realize that,
Hello?
like, practice. So I get it now.
Someone else had a comment or question or?
Hello?
Yes.
I was trying to know how to unmute it, but this trade right here is this Ramon. Australia and New Zealand, it's too late now. You know, you can look at it, but it just started about 15 minutes ago. You can check it out, but you can start it. Australia and New Zealand dollar. It had just started. I mean, you know, you can check it out.
Oh,
I was trying to unmute it, but I couldn't. I ain't know how to operate this thing.
oh, we just missed some money. Y'all see that? Now this was a perfect trade.
We just got our P-Star.
Oh, this one should have went in the chat. Ramon, oh my God.
Yeah, my bad.
Oh, we just
So someone just screamed, we just got our PSAR. So what should you be doing on this AUD CAD? I mean, it's AUD New Zealand.
This is Lady Cat. You should be taking the trade.
You sound happy. You're supposed to get in it now.
Execute.
Oh yeah.
I ain't know how to unmute the thing. I got it now. I see how to do it. My bad.
Okay, so no more. So next Thursday, you calling trades, right?
All of them.
Market execution, yes. This is what Thursday night is all about. This is exactly what Thursday night is all about. This is a beautiful trade. This is screenshot it, everybody. This is what a trade is supposed to look like. The stochastic is beautifully around that 20 in an upward trend. That green candle with a flat bottom, and the PSAR is beautifully placed beneath it. The dot, for those of you who keep calling it a dot. Those are the three rules, and it's going for a buy. You want to hit market execution in your MetaTrader 4. All your analysis is done on the web analyzer. All your analysis is done on the web analyzer. Then you enter your trade in your MetaTrader 4 market execution. Get your 10 pips and cash out. This is a beautiful trade. Beautiful, beautiful, beautiful. This is what your trade is supposed to look like. This is, it's just that simple. This is how you make money. And this is why you have a 92% accuracy rate and higher, because I can guarantee you, and I can say this very comfortably, when you don't, for the 8%, it's human error. That 8% is because things that we do. That 8% is my stochastic is going sideways, or I'm chancing it and I'm entering, you know, I'm doing something. My PSAR hadn't flipped and I want to chance it, or my stochastic is in the middle, or I did something, you know. But
called into the call.
You say what? Say that again. Okay, I guess we don't have a question. So, but this is it. Any other?
So for those of you who see this and really, it's really sinking in, to make sure that we are disseminating this information accurately, I need you to type a 777. That means you completely understand the simplicity of the BYOB cash out. If you see it, type 777 in the chat.
I have a quick question. This is Lynn.
Yes, ma'am.
Is it best to enter when that candle is longer than versus when it's shorter?
The longer the candle, the stronger the trend, because you'll see how the candle forms. The candle will form the strength that it is, because these are indicators. These are not, okay. And I'm just to make clarity so everybody understand, the Hikinashi candles, and this is why you can't get it on anything else, right? As far as this is why we have to do it on here, because these are not candles per se. These are indicators. So the Japanese candles, when you look at a Japanese candle, is the back and forth between the buyers and the sellers, and that's why they look different. So if I switch it back, just so everybody can see, this is what a Japanese candle look like, right? You see the choppiness of the fight in the market, you know, the choppiness of the buyers and the sellers going back and forth. Well, the Hikinashi candles are an indicator. So these are an indicator between the buyers. Like I say, it's the indicator of the path so it's measuring a trend. It's like the past of what's happening. So
Dyer.
Yes.
Can you look at the JPY USD?
So it's an indicator of the trends. So because of that, you know, that's why a strong candle, the stronger the candle, the more solid with no wicks. That's, you know.
And just to add to that, so folks, so you understand, you know, if you're looking at the Japanese candles, you want to be able to effectively draw a trend line to determine whether it's an uptrend or downtrend. The benefit of using the Hikinashi candle, it already identifies the trend for you. So a lot of the heavy lifting is done. The red candle is going to indicate a downtrend. The green candle is going to indicate an uptrend. And the longer the candle just means the longer the trend is already in existence. So you're going to be able to train your eye very quickly to understand how long the trend is and how strong it is. But remember, the Hikinashi candle has already identified the trend on your behalf.
Right. So the longer the candle is, the fatter it is, the stronger the trend. So I'm not touching this one. JPY USD is what you said? Is this right?
No, hold on. EUR is not ready yet, but it's getting ready to turn. Put it on the watch list.
Or
the JPY EUR. It's over
So
80.
Let's look at that and talk us through why you would put that on the watch list. Explain to us why.
The JPY EUR.
Yes.
Okay, you have your stochastic is getting ready.
Oh, it is.
Miss Tasha, hold on one moment. Wait a minute. CHF JPY has a P star on the top, smooth top. It's going down into a sell. Everything, all things are lined up. CHF JPY. I'm so sorry to cut everybody off. I'm
No,
so
that's
sorry.
we got it.
No problem.
Says CHS.
CHF JPY.
JPY.
What is the CHF Swiss franc?
Yeah, no, I heard it wrong. Got it. Let's go. No, hold on, stochastic.
We in it?
That is close. It's not.
No, that's real iffy.
That's iffy. I mean, I'm looking closer to the 80, so it's a chance. See if I go up time frames.
Isn't that market
So
consolidated?
whoever called that out, explain to us why you think that's a good trade.
Well, Tranisha called it out. When I went to the 5 minute, it was a strong sell at a 5 minute. So when I went to the 15 minute, it showed that it had a wick on the top, wick on the bottom into a sell, and it's a long candlestick. Now, when I called it saying, look at it, it was in the 80. It was in the 80 percentile going down when I said, watch it.
And that was on the 15-minute chart or the 5-minute chart?
That was on the 15 minute when the wick was on the top and the wick was on the bottom. And then when I called it, I looked at the 5 minute and it was a strong sell going down on the 5 minute one. So then when it went to the next one, the P star flipped to the top and then it went down.
Right. So just for everybody to understand, this strategy is designed specifically for the 15-minute chart. So you want to make sure that if you're doing any analysis, you want to do it at the higher time frames to confirm the movement. For the BYOB cash out is designed for you to analyze on the 15-minute chart. And for those of you who are more advanced, for those who are looking at different time frames, you want to perfect this strategy based on the 15-minute chart. There's going to be some additional things that we're going to be sharing with those individuals once you get truly committed to understanding how the 15-minute time frame works. Because although it may appear ready on the 5-minute time frame, this is how you're going to have a complete and total success rate of that 92%. And then we're going to teach you how to build upon looking at different time frames. But this strategy was designed specifically for the 15-minute time frame. That is one of the rules.
Mm-hmm.
That is one of the rules. So not only do you have the PSAR, the stochastic, the flat bottom and flat top, but the other rule is also do everything from the 15-minute time frame. And if you're not doing that, then you're going to miss trades as well.
Yes.
So be clear that you're utilizing the 15-minute time frame, which is also a part of the rule.
I also have a question about this. On the CHF JPY on the 15-minute, isn't the market on this one, isn't it a little too consolidated to even consider that to be a good trade?
I wouldn't take it, and I mean that's what I say. Everybody sees things differently.
It didn't hit the 80 mark.
It's not at the 80, and even if you go up time frames, the 30-minute is in an uptrend, and the hour is still in a strong uptrend. So if you look at where the PSAR is at, it's down at the bottom. So that's where I say you don't know. When I was explaining earlier that you don't know when you're not at that 80 or 20, you don't know where you are in the big picture of the market. That's why that 80 and that 20 is so important on that 15-minute time frame. That's why, and yes, it is very consolidated. So if you look, it's going back and forth and back and forth. So now, and that's why I say everybody just sees things differently, but I see the back and forth and the back and forth. But the rule, but that's where the rules come in, as Mr. Rogers was just, that this is where the rules, because if we stay away from, you like, I think, I see, I feel, you know, and stick to the rules. That's where the 92% come from. This, let's see, what do we have here? Who called this? Who called the Euro JPY?
Kimbro.
Kimbro.
Yeah, I was
Talk to us.
I was looking at. I didn't say that it was ready yet, but the stochastic is at the 80, and the thing about it is the stochastic itself is consolidated, but we know that with it being above the 80, that it has to turn around because the market has to correct itself. So we still have strong candles, strong buy candles right now. But if we keep a watch on it, sooner or later, it has to turn around and head back towards the 20.
Which is correct. You would put that on the watch list.
Mm-hmm.
But the main point about why this strategy is so easy to duplicate and so simple is because, yes, it is going to at some point turn around. But as far as winning, then that simply means we are going to win when all the rules are in alignment.
Mm-hmm.
So what are you at this very moment?
No, this
Like,
is. Go ahead.
Would you not execute at this very moment?
No, this is not a trade that you would execute.
Okay, so
Can anybody tell me why you would not execute this trade?
Because all three of the rules are not in effect yet.
That's right. The PSAR is not up above for a sell.
Right.
how do I know I'm looking for a sale? Let's start at the very, very beginning. What was
You're looking for a sell because the stochastic is above the 80 at that point. You know at some point it's going to go down. And you're looking at the PSAR, which is still below as a sale, but it's very close to being flipped. But it hasn't flipped at this point. So
and what else?
Okay.
And what else? What's the visual we see? We gonna play a game. Red light, green light. What else is missing?
It's green. It's right. It's green.
It's not red.
It's not red. You're right.
Yeah, it's not red.
That's very important. That's very important. I don't have a red candle, so I know it can't be a sale based on the rule.
Exactly.
Even though the stochastic is telling me it's a sell because of the momentum, right? So I don't see a red candle with a flat top, right? I don't see the PSAR at the top, and I don't have a red candle with a flat top.
Right.
That stochastic should be what? Did I miss it? Did anybody say what the stochastic should be doing?
Yeah, it should be going
down.
Right. Correct.
Right. So when we follow the road signs, we will make sure that we get to our destination.
Absolutely.
Y'all should be excited about red light, green light. You remember that game we played as kids?
Yeah.
This is how we become profitable off of it now.
3 simple rules will put you in profit. 3 simple rules. 3 simple rules. Enroll, and you learn these tools. You're gonna learn this skill set. You're gonna learn it. And when you learn it, you're gonna put yourself in a position of profit. Because you're gonna learn how to think like a bank, act like a bank, and become your own bank. It's just that simple.
Amen to that.
Do we have any questions, any comments, or any testimonies before we transition this call?
Tasha, this is Stacy. I have some. I'll be very transparent. This, like I said, the last call. I've made a number of different, not wise choices when trying to make some of these trades where I wasn't in profit, just based on not following the rules. Sometimes you get emotional, like you said, the emotionalism comes into it, and you say, "Well, I really want to get this trade in, and I think I can make that money." And I've learned my lesson with the stochastic being in the middle, and then trying to make that trade. Everything else looks like it lines up, and then you jump into the trade, and it undoubtedly goes the opposite way, and you're not making money. So even with your stop loss and stuff, it's this: you really want to follow the rules to be in profit.
I got a question.
That's phenomenal. Okay.
I got a question.
Go ahead.
On New Zealand USD, I want to ask you a question. Look at it right quick. Would you take that trade if the P star would have flipped on the sale right here, even though it's a little bit above 60? I would do it. I'm just asking. Would you
I would
do
have
it?
done it, and I would have done it here. I would have done it back here. So not now, but
I know not now. When it first started, I'm saying jump in at the first P
like
star.
so. Well, let's analyze this. So you can't see nothing. So this was around when everything started lining up, right? So when
Yeah.
everything started lining up, I was there. So I know, see, my stochastic started around the 80, and then everything started lining up. I'm not gonna take a trade when it's all down here. Now you looking at it's like when you looking and it's all around here when it start lining up. But when it start lining up around the 80, and then that third indicator flip, I'll take a trade then. You know what I'm saying? But I'm not gonna take the trade when it's when it don't line up till I'm like all the way up there. But I'm gonna take it. As you start trading and you're learning it, you'll learn like everything was lining up around the time of the trade. But I'm not gonna take it when it's way down. See, it's a strong down, and everything was lining up when it's like it started lining up when it was around the 80, and then everything flipped, bam, I'm in the trade, right? Those are the rules. But I'm not gonna take it when it starts around here. So like if you look, when this uptrend started right here, it didn't start where it was supposed to start, right? So this one didn't even start close to where it was supposed to start. So if it starts where it's supposed to start and everything is lining up, I'm taking a trade. But if it didn't start, like this one started halfway in the middle. This one starts in the middle. This one, you see what I'm saying? So if it starts where it's supposed to start, then I'm gonna take the trade. If it doesn't start where it's supposed to start, then I'm not gonna take the trade.
Yeah, I was
And just
talking about the sale though, not the buy.
No, I was talking about the sale.
Yeah. Okay.
But I was talking about the sale, but it's like there was a sale. I'm not gearing up for a buy right now, but the sale started way back here. Over here, I can't take one here. I was talking about this candle way back here.
Yeah.
Not we 3 candles in now. I couldn't
And
do it.
just be my, let me just jump in here real quick to help you understand. You can enter the trade at any time you want. However, if you're looking at the rules and you want the highest rate of accuracy that's going to be favorable to you, then you do not want to enter that trade when it's in the middle or any of that.
Yeah. That's what I was
So
saying.
you want to maximize the pip count. You want to make sure that you just simply, if it's a sell, all 3 rules are aligned at the 80 mark with a strong down curving. And if you enter that trade when it is in the middle or lower, that just means that your accuracy rate is going to be completely compromised and diminished.
Yeah, that's what I was saying. Some people, I was just saying I wouldn't take. I'm just some people are jumping that trade. I would just pinpoint it because it looked good. You know what I mean?
Right. Yeah. So the reason why the rules are structured on this particular strategy is to ensure that that accuracy rate is at that 92%. That's the purpose of following all 3 rules. So before we get ready to transition to our next call, I just need to know if was this call beneficial? Was it helpful? Is it clear? Is it becoming clear? Are you excited? And if that's the case, give me some love, show me some love, and type 333 in the chat if you are very appreciative of what you've learned this evening. 333 in the chat. Fantastic.
Three, 333, my brother. Yes, I love it. I love it.
I got another question. Hello?
Yes.
It's I just wanted to mention that do y'all use the currency heat wave? Is that a good thing to use?
The currency heat wave is an excellent thing to use, but when I'm trading this, no, because you are just getting 10 pips. But I'll explain that I go into a lot more detail on Tuesday because it's time for us to transition this call. And I will make sure that I go into great detail on why and why not on just 10 pips. So I would definitely make sure that I talk about that, the whys and the why nots on 10 pips. So I got you, and I got that for Tuesday. So without any further ado, it is now 10 p.m. It is time to transition this call.